Good Wednesday morning. Welcome to Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Starbucks shares rocking after a comeback quarter for them. It's Fed decision day in America, and I'm also on high alert for earnings out of big tech names like Tesla, Meta, and Microsoft after the closing bell today. All of that said, every day I come on here chatting it up on every other company's big news. Well, today I am devoting a good chunk of time shouting out my very own mothership. Now, not many internet companies from the past 30 years could boast having a treasure history while also being loved and relied upon daily by millions of people in the present day. I so happen to work at one of these storied companies, and it's Yahoo. The tech pioneer was the first guy for people through the fast-growing internet in the mid to late 1990s. Along the way came legendary products such as Yahoo Search, Yahoo Finance, Yahoo Sports, Yahoo News, and Yahoo Mail. These are timeless products, and they endure today as the go-to trusted guide for millions around the world. Quick plug for Yahoo Finance because I am so darn proud. We are number one in our category by a wide country mile. This week, Yahoo has put its own innovative stamp on its long timeline of history making. The Yahoo team has debuted Yahoo Scout, a new proprietary AI-powered answer search engine. I could sit here and tell you how I was up all night using Yahoo Scout on Yahoo Finance because I was, and it was awesome. But let me welcome on the person leading the innovative charge here at Yahoo. That is Yahoo CEO Jim Lazone. Jim, I have to be honest with you, man. I almost came on here wearing a purple hoodie, but then I said to myself, look, I love Yahoo, but I don't interview other CEOs wearing purple hoodies, so I'm not going to do that to Jim. That's how excited I am about Yahoo Scout. Jim, why'd you launch this?
Well, by the way, Brian, I almost did the same thing. I almost came on wearing all purple and thought against it, But look, as you know, when we first came into the company in very late 2021, so the first thing we had to do was lead a transformation of the business, and that took a little while. But starting in about 2024, we got through that, and we started relaunching every product that we operate. As you know, Yahoo Finance got a big upgrade. Things like Yahoo Fantasy just had its biggest year ever. Yahoo Mail just had its biggest day ever. We've been building an ad tech business with our DSP. So we've been doing all these things, but search is still one of our biggest businesses. And up until yesterday, we had not touched search ourselves really since 2009 through a partnership with Microsoft, which we still have for web search. But as of yesterday, Yahoo Scout is our new AI-powered search engine that we built internally with a lot of partners, including Microsoft. But it really brings all the rich data from our user relationships, all the usage over the years, our 30 plus years of search history, our content verticals like Yahoo Finance. And we brought all that goodness together to answer people's questions in a really unique and interesting new way that we think adds new value to the category.
Jim, like I mentioned, plugging your appearance on LinkedIn and X this morning, I used this last night to create a condensed research report on Netflix. It fired up a report in seconds. As you look into the future for Yahoo, why is something like this so important?
Well, look, search is changing, and it's still the main way that people are finding everything online. The first generation of AI search engines really were chatbots, and they were very conversational, and they went out and essentially took all the information from the internet and brought it back to you in a conversational mode. But it was very limiting compared to a lot of the things that web search did well. And with Yahoo Scout, we actually are also returning answers, direct answers, in a somewhat conversational fashion, but also bringing the best of search to bear with highly visual responses and a lot of direct links to the sources of information where we get our answers from. In some cases, that's something like Yahoo Finance that we do internally, but in a lot of cases, that's the open web. And so what you'll see in Yahoo Scout are also a lot of highlighted links out to the sources that the information comes from. So we're also actually kind of going back to the original social contract of search, which is we get our answers from publishers out there, but then we also send them traffic back. And that really has been a core value of what we built here with Scout.
In this AI moment, Jim, how important is it that we reestablish that social contract with publishers?
I think it's incredibly important if we want to keep getting great answers because, the businesses that they run on their own websites are how those answers are generated. And so the good news is it's actually better for the user experience. We really think with this product, we've hit the sweet spot between chat and traditional search and really blending the best of both. But in doing so, also keeping the open web very healthy. And we think that's really important. We also think that can be true for search advertising, which also has not really crossed the chasm to this first generation of AI search. And some of the things you've heard out there have been really display banner ads, which ironically Google first did in 2000, 2001. They sold banner ads before they built AdWords and kind of took a page from the book of Overture. We think actually traditional or search advertising can come along for this ride as well, and we're also working on that.
Do you envision Yahoo Scout going eventually to something like OpenAI does, like paid memberships, paid subscriptions?
Well, it's definitely free to start with, and I think including Yahoo Finance, every great free business on the internet maybe has a premium tier. We have that with our subscriptions at Yahoo Finance. I could see that happening here as well. But we really do think the core business can be subsidized very well with search advertising that we think comes along to maybe a new format, but really does that. By the way, the other great thing, and I think this hits Yahoo Finance users very, very much as well, is we also launched the Yahoo Scout intelligence platform. So yes, we launched an AI engine called Yahoo Scout, but then we're also bringing Scout out to all the properties of Yahoo. And so in Yahoo Finance, for example, if you search up any quote for any stock, you'll see a button that says Analyze. That will dig deeper and actually give you the latest information on what's been happening with that stock. It does the same thing in Yahoo Sports. Go to any game summary, like during the Super Bowl, and you will be able to see a Scout button there, hit it, and it will give you a really robust explanation of what's happening in the game beyond the box score. We do that in Yahoo Mail. We do that in Yahoo News. So that intelligence platform is really informing all of Yahoo. So this has really been a two-way thing for our company, which is all the verticals and all the parts of Yahoo come together to help create Scout, but then Scout is actually going back out to the properties to make them stronger. And as we get to the next generation of Yahoo Scout, which will be personalization, you'll see that even more.
Everyone knows Yahoo, Jim, and I'm convinced everyone knows you. And that gives you the luxury of picking whatever model you wanted to, but you went with Anthropic. What stood out to you about Anthropic?
Yeah, and they've been, first of all, it's obviously one of the highest quality, if not the highest quality, large language model. Yahoo ourselves, we're way too small to be creating that ourselves. We'll leave that to others. But also, Anthropic and Claude, they had not really worked with many consumer-facing companies yet, and they have been amazing to work with to let us, kind of take all those ingredients into our restaurant. And I should mention, Eric Fang, who leads the Yahoo Research Group, was really the mastermind behind this project. We acquired his company Symbol last summer, and that team came in and took over the Yahoo Search Group as well, and really spent the last 6 months only building this product. So it's pretty amazing to see. Eric, by the way, people know, was he was the founding chief technology and product officer at Hulu. He actually even named Hulu. But before that had worked on Microsoft Bing and other things, very well-known guy in the Valley. So Eric really has been able to bring, the best of our content and our data. You mix it with what you're getting from not only Anthropic, in terms of the large language model, but also Microsoft Bing for grounding, and you pull all those things together. And Eric and his team, create with that this amazing new product that stands up on its own.
Jim, you and I have a mutual friend in VC, Bill Gurley. You, of course, known him for a lot longer than I have. I recently had him on my podcast, and he said, Brian, a lot of these companies that are raising large amounts of money in tech to support their model ambitions, they're losing a ton of money. They're going to lose a lot more money. Can this pace of capital raise continue for these companies? And what do you think about the valuations?
Well, I think I have the benefit of having a day job that is all encompassing. And so, I know what they're doing is very expensive, and for sure, we've seen these cycles come where a huge amount of investment precedes a lot of growth in the category. For us, we take a little bit different approach in that we spent the first couple of years here really rebuilding the business, getting on sound financial footing. So Yahoo, we make a lot of money, we're very profitable, and we have this great base to start building from. And of course, by not being either an LLM or a hyperscaler, we're not really involved in that level of capital raise. We can do this and actually be growing at a healthy clip. And growing our profits at a healthy clip. So we're in a little different spot from the rest of them.
How would you compare?
But I do hear Bill, my old investor, my old startup.
Yeah, Bill's an interesting cat. How would you compare what we're seeing, this AI moment, to when the internet was being built in the late 90s?
I mean, I think from Mark Andreessen to Reid Hoffman, everyone said it's another moment that's equivalent to the birth of the internet. Some people think it's equivalent to the birth of computers in the first place. That's still yet to be seen. I think, it's funny. I saw a stat the other day that only 15% of Google users have even used ChatGPT, which seems unbelievable. But it reminds me of when we first built streaming services. I spent some time in the streaming wars as well. And only 50% of people 10 years ago had used a DVR. So, people do come along with this a little more slowly, but search has been, I'd say, the first consumer-facing, ground war here. Of course, there's others, coding, for example, and other uses of this. But yeah, I think we're still very early innings of something that is clearly going to be a huge new category, especially in consumer.
You think one model wins out?
No, there's always been room for more flavors. I do think that in search specifically, as we did this project, you can imagine, I'm going to get a bit of a rest now because I was doing every query that I was doing on 5 different engines for the last 6 months. So maybe that can chill out a little bit. Users have had a hard time differentiating between these products. I would say, they know ChatGPT was the one that invented the category, perhaps, but for everybody else, it's been pretty thin on differentiation. I've seen over time that there have always been room for different flavors of products, whether it's in streaming or in search. So I don't know that it really resorts to one. I think these companies are going to have to make choices. Obviously, Grok has made certain choices. Who they partner with for their data over time will change the flavor of some of these things. And then on the front end, there's just a lot more we can do. In Yahoo's case, we're bringing data to the table in this product that nobody else has. Because this is our usage data over 30 years. These are our direct relationships with our users. And that's another part of this launch, which is, yes, would I hope that the whole world will use this product? I hope it's that good and that people find it that valuable. On the other hand, we're every month one of the 5 largest properties in the United States in total users and in total usage. And if we just do a better job for our users, we're going to get a huge amount of growth and take a piece of this category.
Jim, I know you're a busy guy. Before I let you go, toughest question I've asked you so far. Have you used Yahoo Scout for your Super Bowl pick, and who is it?
I've not used it for that pick. I'm a 49ers season ticket holder, so I will not be rooting for the Seahawks no matter what. But I have dabbled with it for things earlier in the season, fantasy football, college football betting, things like that. And I would say it's very good.
Can you believe Belichick not a first ballot Hall of Famer? The hell's up with that?
I don't know. Maybe it's recency bias with this North Carolina disaster, but it's a joke. I mean, he should obviously be in. It would be like not letting Bill Walsh in on the first try.
That is correct, or not having you in the Internet Hall of Fame, Jim.
Oh, no,
Jim, good to see you. I will be seeing you very shortly, probably in all hands. Jim, thank you so much. Appreciate it.
All right, Brian.
All right, coming up, I hand it off to Jennifer Schomburger in D.C., who was at the Treasury Department Summit. Hopefully, she's using Yahoo Scout. We'll be right back. A major milestone in financial markets. The S&P 500, the benchmark U.S. stock index, has crossed 7,000 for the first time. Really major news here. But again, I will remind everyone, it's just a round number. Companies are valued in terms of stock valuation, profits and sales, but nonetheless, good to see. Let's go to markets and data editor Jared Blikre for a check on the markets.
Thank you. Let's check in on the market here. We got the Dow up about 38 points, inching closer to a record high. I'll show you the really short intraday price action there. Everything in the green so far. But again, this is pretty muted volatility. NASDAQ, though, that's up about 0.5%. And I got to show you the S&P 500 back at record highs. Hit a record closing high yesterday. We got a record intraday high, and it was just briefly above 7,000 for the first time. Here we go, 7,002.28. That is the high for today and for all time. Let's also check in on the Russell 2000. Small caps up about 0.2% today, and I do want to get a check on the bond market. So we're going to start with the 30-year. This is up about 3 basis points to 4.86%. The 10-year is up 2 basis points to 4.24%, and the U.S. dollar index, we're going to call that about break even right there, although you can see overnight spend most of the time in the red. And let's check out the sector action where tech has been driving the bus lately. It hasn't been the story all year, but tech is making a comeback recently. Then we got energy, consumer discretionary, and several other sectors in the green, but we got a few in the red too. Healthcare, that is leading down. XLV down about 0.5%, followed by industrials and staples, also utilities and financials in the red there, but not materially. And here we got NASDAQ 100 components and NVIDIA in the upper left. That is up 1.5%. Tesla just behind it. Looks like Broadcom, Microsoft, Amazon, Meta, Alphabet, all in positive territory, but under 1%. Apple about 0.2% down. And let's check out semiconductors. I'm seeing a lot of dark green here. So we got Texas Instruments up 7%, Micron up 4%, Taiwan Semi, and we already covered NVIDIA, but Intel here. Intel up 9%, almost 10%. And just checking in on the year to date, we can see it is up 30%. Pretty big drawdown after those that earnings announcement last week, but we are looking at some substantial gains there. And we got to check in on the fortunes of software too, because you don't always see both software and chip stocks rallying hand in hand, but they are today. Here we got Oracle up 2.5%, Snowflake up 3.5%, Datadog, Atlassian, Twilio, and Nutanix up over 2%. And I'll take a look at the Dow here. Here we, aside from the mega caps, we got kind of an even spread between red and green. I did mention some strength in some healthcare names, so we got United Health up about 3%. Back to you, Brian.
Thanks so much, Jared. S&P 500, 7,000. Love to see it. All right, the Federal Reserve is set to make its interest rate decision later today. Investors will be listening closely to Fed Chair Jerome Powell's press conference for a sense of direction for the Fed, which is under considerable pressure from the Trump administration. I'm going to send it down to our Fed correspondent, Jennifer Schomburger, with a special guest. Jen.
Thanks so much, Brian. I'm joined here in Washington by Joe Lavorgna, counselor to Treasury Secretary Scott Bessent, where we are at the Trump Accounts event today. Joe, great to see you. Thanks for joining me.
Great to be here. Thank you.
I do want to kick off the conversation with these Trump accounts because I was looking at some projections. These Trump accounts being rolled out on July 4th, the Treasury giving $1,000 to every child born during the duration of this administration. And if you were to contribute $1,000, if you would have that $1,000, I should say, you would earn $5,800 by age 18, $18,000 by age 28, and if you contribute $5,000 a year, you could have over $1 million by age 28.
Right.
How does this work, though, exactly?
So essentially, as you said, you sign up on trumpaccounts.gov, look for Form 45, 47 when you're doing your taxes. Everything goes live, or you get your money effectively around July 4th, $1,000. Then you could contribute up to $5,000 annually. And based on compound interest and historical equity returns, that $1,000 plus the $5,000 per year annual max contribution is worth over $300,000 by age 18. By age 28, it's worth almost $1.1 million. Again, maximum contribution, the initial $1,000 plus $5,000 every year thereafter.
Is it automatically invested in an index fund?
It'll be a low-cost index fund, something analogous to like the S&P 500.
All right, switching gears, the Fed is meeting today. We know that the Fed cut 3 times at the tail end of last year, the administration in favor of cutting rates further. The Fed is expected to stay on hold today. What is the administration's message to Chair Powell and the rest of the central bank?
The Fed has talked about rates being high relative to their projections of neutral, and even the central tendencies within the FOMC, their forecasts show that rates are expected to go lower. The Fed has conditioned the market not to expect a January move, and the Fed never goes against strong market expectations. If, however, inflation continues to move lower and we get a disinflationary boom as we believe we're in at the moment, then that would argue for lower rates. So I'm hopeful that if the Fed is applying the right models and methodology, they will lower rates to at least a neutral, if not accommodative rate, because as inflation comes down, holding monetary policy steady means real rates are rising. Monetary policy becomes more restrictive. And we know policy is restrictive when we look at many cyclical parts of the economy, such as housing. Rates are too high.
Secretary Bessent had teased that we could get an announcement from the president on who the next Federal Reserve chair will be post-Davos. We're at Wednesday now. Granted, we still have a couple of days left in this week, but there are some reports that The president is rethinking whether the 4 finalists have what he wants to be Fed chair. What is your sense of where the process stands now?
The president has 4 great candidates to choose from. You know, the president's talked about doing it sooner and then he's pushed it out. He wants to be very careful and very thoughtful in his deliberations and his thought process. Historically, these Fed chairs oftentimes don't get announced until late February. You know, we're just used to maybe the president moving so quickly and trying to always go from one accomplishment to the next. So I think, you know, we put a historical precedent on it. You know, it's not unusual. We don't know yet, but I would take the president and the secretary at face value. They're thinking about it, or the president's thinking about it, and we'll get an announcement in due course.
Does it worry you that Senator Thom Tillis has said that he is going to block confirmation, block the process until the criminal investigation into Chair Powell is buttoned up? Do you see Governor Myron, who was supposed to step down by the end of this month, staying on for much longer?
Stephen Myron can stay on until that role is fulfilled. I'm very confident that the president, whoever he chooses, will do an excellent job in running the Federal Reserve, and that person that will be picked will go through the Senate confirmation process and be successfully confirmed.
You're not worried, though, it's going to be dragged out because of what's
I don't believe it'll be dragged out. No, there's, again, the Secretary Powell's term as chair, I believe, ends May 15th of this year. I think that's the exact date. There's a lot of time between now and then, and I'm expecting a successful resolution and the president putting somebody forward who will do a great job running the Fed, whoever that turns out to be.
We're looking at potentially, switching gears, a partial government shutdown at the end of this week if the Democrats don't support funding DHS. Where do things stand now? What is the administration willing to do to move the ball forward on this?
Well, the House has voted on a bipartisan bill, and Speaker Johnson may decide he doesn't want to vote again. Senator Thune is exploring some other options. That's going to be in Congress's, it's sort of in their court at the moment, and we'll see where it goes. I hope it doesn't happen. There are many Republicans that don't support a shutdown, even a partial shutdown for that matter, and hopefully won't revisit anything like we did last fall. But my fingers are crossed, we'll see what happens, but I don't know more than that.
And as I mentioned at the top of this interview, we are here at the Trump Accounts event. And I do want to ask you, because we've seen the Dell Foundation contribute over $6 billion, $250 per child under 10 for lower income zip codes. Is the Treasury looking at getting other commitments from other philanthropists and private sector?
Yes. Certainly, and there are other big philanthropists that have contributed. For example, Ray Dalio has committed. Different states are talking about instituting the programs and encouraging people to participate. I would expect as people learn more about it, because the more we've seen people hear about it, oh, this is a great idea, it's bipartisan, I would expect more people to contribute and this to be a real raging success.
We'll have to leave the conversation there. Joe, thank you so much, as always, for your insights. So appreciate it. That's Joe Lavorgna, counselor to Secretary Bessent. We'll be right back after this.